Welcome back to the Malaysia Money Matters show. It's February 19th, 2025, and we've got a lot to get through today.
Yeah, we do.
Buckle up, everybody. We're going to deep dive into Malaysian company news first.
Okay, sounds good.
Some international happenings, and maybe even a couple political curveballs, how it goes.
We're just going to have a few curveballs to keep things interesting.
Exactly. So let's jump right in with Johor Plantations, or JPG as they're known on the market.
All right, JPG.
They just absolutely crushed their profit projections last quarter.
They did. They had a great quarter.
I mean, 9.3% year-on-year growth in fresh fruit bunches. That's got to put a smile on some faces.
Yeah, that's impressive. Especially considering they've had to deal with less sunlight impacting yields this year. But they've been getting really good prices for their crude palm oil, and they've been really efficient with their costs.
So they're doing well, despite a few headwinds.
Exactly.
And on that note, both RHB and Leong Investment Bank have given them a buy rating.
Yeah, they have.
Now, I'm not a financial whiz, but what does that really mean for the average investor like me?
Okay, so basically a buy rating means those analysts think JPG's stock is going to do better than the overall market. They're looking at their performance and how they're running the company, and they're saying, hey, we think this is a good bet.
Okay, so it's a good sign, but not guaranteed win.
Right. There are always risks. You never know what can happen with the price of crude palm oil.
Yeah, it can swing up and down like crazy.
Exactly. And you can't predict the weather either. Mother Nature always has the last laugh.
True enough. So buy rating is good news, but you gotta be careful.
It's all about managing those risks.
Now, here's what I found interesting. JPG is building a new sustainable palm oil complex.
Oh, yeah, I saw that.
What's the deal with that?
Well, it's a smart move, I think. Not only could it help their profits, but it also shows they're taking sustainability seriously. And that's important these days for investors and for customers.
Yeah, it seems like everybody's thinking about the environment now.
They are. And JPG is getting ahead of the curve with this new complex.
So maybe a good sign for their future.
Definitely something to watch.
Okay, moving right along. We've got Cahya Sarawak, or CMSB.
All right, CMSB, what have they been up to?
They just announced their highest quarterly profit in over 2 years.
Wow, that's fantastic.
It is. So what's behind this success story?
Well, a few things. Their road maintenance division is doing really well.
Yeah.
Their property development is booming, and their phosphates business is also doing great. So they're firing on all cylinders.
Yeah, sounds like it.
But here's something else that caught my eye.
Okay, Tommy.
Their other income more than doubled this quarter.
Other income? What does that even mean?
So other income can include things like income from investments or one-time gains from selling assets. It's not always from their main operations.
So it's like finding extra cash in your pocket.
Exactly. And CMSB is expecting even better performance for the rest of the year.
That's got to make investors happy.
Yeah, they're riding the wave of economic growth and infrastructure projects. So things are looking pretty good for them.
Okay, now let's talk about Malaysia Airports Holdings, or MAHB. There's been some talk about the Employees Provident Fund, or EPF, losing money because they sold MAHB shares and then bought them back.
Ah, yes, the MAHB situation. It's caused quite a stir.
Yeah, some people are saying EPF made a big mistake.
But hold on a second. The Ministry of Finance has actually debunked those rumors.
Oh, really? So what's the real story?
It turns out it was a long-term investment strategy by EPF. They see MAHB as a stable asset. You know, airports aren't going anywhere.
Makes sense. They're pretty essential.
Exactly. And EPF has actually made money from this strategy. They've earned income from their trading, and they've been getting dividends from their MAHB investment since 1999.
Wow, talk about a long-term plan.
It is, and it shows that sometimes what looks like a loss on the surface can actually be a smart move in the long run.
So patience is key.
It really is, and it also highlights how EPF manages their investments. They have different teams with different strategies. It's a sophisticated operation.
Makes sense for a big fund like that. Okay, let's move on to Billion. They're in the oil and gas sector, which can be pretty volatile.
It can be a roller coaster ride for sure.
But Billion just secured a 5-year contract with Petronas Caragali. That's got to give them some stability.
Yeah, 5 years is a long time in the oil and gas world. They'll be providing slickline equipment and services.
Slickline equipment? What's that?
It's specialized equipment used for a lot of downhole operations, like retrieving tools or measuring well conditions.
Okay. Sounds pretty technical.
It is. And this contract should really boost Dillium's revenue over the next few years.
So maybe a good one to keep an eye on.
Yeah, if you're looking for companies with a solid track record and a good future, Dillium could be worth considering.
Now let's talk about Eco World Development. They always seem to be making headlines with their land deals.
They do. They've got a knack for it.
So what's the latest scoop?
Well, they just sold a piece of land to Microsoft for RM 693.96 million.
Wow, that's a lot of money.
It is. And it's actually their second land sale to Microsoft.
So they're cashing in on their real estate.
They are, and they're doing it strategically. This sale will strengthen their financial position.
Okay, smart move.
What's really impressive is they sold this land for 52% higher than their first sale to Microsoft.
Wow, they know how to negotiate?
They do. They're playing the real estate game like pros. But wait, there's more.
More? What else is going on?
EcoWorld just bought out EPF's stake in a property developer in Puncak Alam.
So they're taking full control.
Exactly. This will give them immediate profit and cash flow because they're adding those existing projects to their portfolio.
It's like they're on a shopping spree.
But a very strategic one. They're really solidifying their position in the market.
Okay, before we move on to international news, let's do a quick rundown of some other interesting company updates.
All right, let's do it.
GDB Holdings just won a big payment dispute for the Akonlay project.
Oh, yeah. That's a big win for them, RM 83 million.
That's not bad at all. And Gas Malaysia is reporting increased profits, and they're declaring a dividend.
So the shareholders are getting a nice little bonus.
Exactly. And Greatech Technology also saw their profits jump because of a good foreign exchange gain.
So some good news for investors there.
But not all companies are doing so well.
Unfortunately not.
Hartalega, a glove maker, saw their profits dip.
Yeah, the glove industry has been facing some headwinds lately.
And that caused their share price to drop, which triggered a temporary suspension of short selling.
Right. That's called an IDSS suspension.
Okay, IDSS suspension. What is that?
It's a mechanism used by Bursa Malaysia to prevent excessive speculative trading when a stock drops a lot.
So it's like a safety net.
Exactly. It's there to protect investors.
And another glove maker, Kasan Rubber Industries, is in a similar situation. They also triggered an IDSS suspension.
Yeah, their share price has also taken a hit.
It's a reminder that not all investments go up, and sometimes things happen that are out of a company's control.
True enough, the market can be unpredictable.
Okay, so that's the wrap-up of the Malaysian company news. Now let's shift gears and see what's happening on the international stage.
All right, let's go global. So it seems like Asian currencies are a little on edge right now.
Yeah, what's going on there?
Well, it's those fears of a global tariff war. You know the one.
Oh boy, not those tariffs again. I thought we were done with that.
Yeah, well, it seems like trade tensions have a way of coming back around. And this time, it's not just the tariffs themselves, it's the fear of retaliation from other countries. It's like a big game of economic tug-of-war, and nobody really wins.
So how does all this tariff drama affect us here in Malaysia?
Well, with the potential for a trade war, the US dollar is getting stronger, and that puts pressure on Asian currencies like our ringgit.
So our ringgit could weaken.
Yeah, it's possible.
Yeah.
If you have investments tied to the ringgit, you might see their value drop a bit.
Okay, so not a reason to panic, but something to watch.
Exactly. It's a good reminder to diversify your investments. Don't put all your eggs in one basket, especially when global trade is a bit rocky.
Good advice. Now let's talk about that other big elephant in the room, the war in Ukraine. Any news on that front?
Well, there might be a little glimmer of hope.
Oh, really? Tell me more.
It seems like Russia is saying that Putin is actually interested in peace talks.
That would be a welcome change.
Yeah, they're saying he prefers a peaceful solution. There's even been talk of a possible meeting between Putin and Trump.
Wow, a Putin-Trump summit. That would be something else.
It would be a huge event, but what would a peace deal actually mean for the markets?
That's a good question. What do you think?
Well, it's hard to say for sure, but it would probably have a positive impact. A resolution to the conflict would ease global tensions, and that could lead to more stability in the markets. Investors don't like uncertainty, so any sign of peace is usually a good thing.
Let's hope for the best. Okay, on a slightly lighter note, let's talk about gold. I hear it's been doing pretty well.
Oh yeah, gold is shining bright these days.
Why is that?
It's the classic safe haven play. When things are uncertain, investors flock to gold. They see it as a reliable store of value.
Makes sense. So what's driving the price up?
Well, for one thing, central banks all over the world are buying up gold like crazy, and that's pushing up demand and prices.
Okay. So should we all be running out to buy gold bars?
Well, it's something to think about. Gold can be a good hedge against volatility, and it tends to hold its value during economic downturns. But like any investment, you need to do your research and understand the risks before jumping in.
Solid advice.
Yeah.
Okay, let's look south for a moment. What's happening in Singapore?
Well, Singapore just announced their new budget, and it looks like some specific sectors are getting a lot of attention.
Like what?
The government is putting a lot of emphasis on lending consumer goods and green energy. They're pouring money into these sectors, which could really boost them, and that could spill over into the stock market.
Interesting. So Malaysian investors might want to look at Singaporean companies in those sectors.
Exactly. Keep an eye on them. And here's an interesting detail. Singapore is investing $1 billion in a semiconductor research and development facility.
Wow, that's a big commitment.
It is. It shows they're serious about becoming a leader in the semiconductor industry.
It's always fascinating to see how governments are trying to shape their economic futures. Speaking of shaping futures, let's talk about Maybank.
Okay, Maybank, one of Malaysia's biggest banks. What's the news?
Well, there's been some news about their CFO. He left the company pretty suddenly after an internal inquiry.
Yeah, that was a surprise. It's raised some eyebrows among analysts.
So what happened?
Well, Maybank says there was no financial wrongdoing, but it's still a bit of a mystery why he left so abruptly.
So a bit of uncertainty.
Yeah, and investors don't like uncertainty. They want transparency. So this is something they'll be watching closely.
It'll be interesting to see how this unfolds. All right, let's take a quick trip down under what's happening in Australia.
Well, the Reserve Bank of Australia just did something they haven't done in 4 years.
What's that?
They cut interest rates. They're trying to stimulate the economy because inflationary pressures are easing. But they're also being cautious because they don't want to cause inflation to spike again.
It's a tough balancing act.
It is. They're walking a tightrope, trying to keep the economy growing without letting inflation get out of control.
Okay, now back to the U.S. What's the latest from the land of opportunity?
Well, it seems like those tariffs might be coming back to bite.
Oh no, what's happening?
U.S. factory costs have jumped by the most in 2 years, according to a survey by the Federal Reserve Bank of New York.
So those tariffs on imports are having an effect.
They are. They're adding to inflationary pressures. And that's putting the Fed in a tough spot. They were thinking about cutting interest rates to help the economy, but now they're worried that cutting rates too soon could make inflation worse.
So they're stuck between a rock and a hard place.
Pretty much. They're watching the data carefully, trying to figure out the best move.
It's a good reminder that the global economy is all connected. What happens in one part of the world can definitely affect us here in Malaysia.
Absolutely. Okay, let's switch gears and talk about tech. What's new in the world of gadgets and gizmos?
Fill me in.
Well, ASE Technology, holding a big player in the semiconductor industry, just opened their 5th plant in Penang.
Wow, that's a big deal. Semiconductors are in everything these days.
They are, and this is a sign that Malaysia is becoming a major hub for semiconductor manufacturing.
So good news for Malaysia.
Yeah. ASE is planning to hire another 1,500 people over the next few years. That's a big boost for the local economy.
Jobs and investment. That's what we like to hear. Okay, before we move on, let's touch on Tabung Haji.
All right, Tabung Haji, the pilgrimage fund. It's been in the news lately.
Remind me what's been going on.
Well, back in 2018, the government had to step in and take over some of Tabung Haji's assets. They weren't performing well, and the fund needed help to recover.
Right, and those assets were transferred to a special purpose vehicle called UJSB.
Exactly. So what's happening now is Tabung Haji is talking to the Ministry of Finance about getting some of those assets back.
So they want them back.
Yeah, they do. And the government is considering it because Tabung Haji has been doing a much better job managing their finances and their governance.
Okay, so they've turned things around.
It seems like they have.
Yeah.
They're hoping to finalize the discussions this quarter.
Well, that's a positive sign. It shows they're committed to transparency and accountability.
It does. And that's important for regaining the trust of their depositors.
For sure. Okay, last bit of international news. Let's talk about cars. Remember those merger talks between Honda and Nissan that fell apart a while back?
Yes, the automotive drama.
Well, it seems like there might be a new chapter.
Oh, really?
Mm-hmm.
What's happening?
Well, according to a report in the Financial Times, Honda is willing to come back to the negotiating table, but they have one condition.
A condition? What is it?
They want Nissan's CEO, Makoto Uchida, to step down.
Wow, that's a big demand.
It is. Why would they do that?
Well, it seems like they think a change in leadership at Nissan would make the merger go more smoothly. They're worried about internal opposition to the deal within Nissan, and they think a new CEO would be better equipped to handle a merger of this size.
So it's all about finding the right person to lead the way.
Exactly. It'll be fascinating to see how Nissan responds to this and whether the talks will actually restart.
It's a reminder that even in the corporate world, personalities and leadership styles can have a big impact.
Absolutely. So are you ready for the most exciting news of the day?
I am. Hit me with it. Okay, so the KL Singapore high-speed rail, or HSR for short. This project has been in the works for what feels like forever. What's the latest?
Well, the government is busy finalizing all the key details, the really important stuff, like which consortium is going to get the contract, how they're going to pay for this massive project, and what the impact is going to be based on all those complex models and projections. Once they've got it all figured out, they'll be presenting it to the cabinet for approval.
So we're getting close to some real answers.
Yes, it seems like it. The government knows this project could be a game changer for Malaysia, and they want to make sure they do it right.
All right, let's imagine for a second that this HSR actually becomes a reality. What would it be like? What could Malaysia look like with a bullet train zipping between KL and Singapore?
Well, picture this. You grab some breakfast in KL, hop on the train, and arrive in Singapore in time for lunch. We're talking 90 minutes travel time. But it's not just about speed. Think about the economic boost. Tourism would skyrocket, trade would become even easier, and the real estate market along that corridor would probably go through the roof.
Yeah, I can already see myself sipping a Singapore sling by lunchtime. But all those benefits got to come with a hefty price tag, right? This project is going to cost a fortune.
It's true. The HSR is a massive investment, but the government sees it as an investment in the future. They're betting that the long-term economic benefits will outweigh the upfront costs.
It's a big gamble, but a potentially very lucrative one. What about the environmental impact, though? Building a high-speed rail line through forests and sensitive areas can't be good for the environment.
You're right, that's a valid concern, and the government is aware of it. They're looking into ways to minimize the environmental impact using sustainable construction methods and creating wildlife corridors to protect animals.
So it sounds like the HSR is a bit of a mixed bag. Potential economic benefits, environmental concerns, and of course the excitement of high-speed travel.
It's a complex project with a lot of moving parts, but it's definitely one that could reshape Malaysia's economy for generations to come.
Wow, what a whirlwind of a deep dive today. We've covered everything from company profits and trade wars to gold prices and high-speed rail. It just goes to show that the world of money and investing is constantly changing.
It certainly is. And it's so important to stay informed.
Exactly. Knowledge is power, especially when it comes to making smart financial decisions. We hope this deep dive has given you some food for thought and maybe even inspired you to take a closer look at your own investment portfolio.
And if you're eager to learn more about all things finance, be sure to subscribe to the Malaysia Money Matters podcast. We'll be back soon with more deep dives into the topics that matter most to you.
Until then, stay curious, stay informed, and keep those investment wheels turning.
Goodbye for now.
See you next time. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.